Hello. How are y'all? Grand. That's excellent. How'd you do on the test?
We don't know because you left them at home.
No, you're right. I haven't handed them back to you yet. But if you're watching this video, whether you are here face-to-face or here at home in my online class, you should have already taken your test, number 2, over chapters 14, 16, and time value of money, right? But what we're going to do today, I think I promised you that we were going to talk a little bit more about cash flow statements, even though we've had the test, okay? Now, I will assess you on this knowledge in a way that I'll describe here shortly. But we are going to talk about cash flow statements more today, okay? As a matter of fact, I think I behooved you to do New Warnick cash flow statement, the full cash flow statement, before you came to class today, right? Did you all do it? Michael, did you do it? Matt, did you do it? It's all right. The world needs manual laborers as well. No, and if you folks at home, I wanted you guys to do the New Warnick cash flow statement in its entirety, because we're going to go over that now. I'm going to presume that you did that. So if you have not done that, folks at home, you should pause and go do the New Warnick complete cash flow statement, not just the operating section, but the complete cash flow statement for New Warnick, and then push play when you have it done. But we're going to go over it now, okay? All right, did anybody get it to work out? Yeah? Very good. Let's take a look at it, and let me remind you of the steps of doing a cash flow statement, okay? Step number 1 is to do the operating section. Is that correct? And you were tested over that, weren't you? So there is the operating section. That's step number 1, is to calculate your operating cash flows. And I got $4,300. Did anybody else get that? Okay. All right. Do you remember what the next step is to doing a cash flow statement? The next step, step number 2, is to go to this information at the bottom of your cash flow statement and classify and quantify. Step number 2 is classify and quantify. Now, in an educational setting, this information will be given to you at the bottom of your cash flow statement. In real life, of course, this would be in your accounting records for the year. Okay? So for each one of these situations, let's describe what type of cash flow it is, and if it's an inflow or outflow of cash, and how much cash flowed in or flowed out. Okay? All right, Stock and Bowens. Now, who are we? We're New Warnick, right? We're New Warnick. So Stock and Bowen, held as a long-term investment, was sold for $9,000. There was no gain or loss on this transaction. What type of cash flow is that?
Investing.
That's an investing. Is it an inflow or an outflow?
Inflow.
It is an inflow. And how much of an inflow is it? An inflow of how much? $9,000. Okay, good. Dividends of $7,500 were declared and paid during the year.
Financing.
This is a financing cash flow. Okay. And is it an inflow or outflow?
Outflow.
It's an outflow of cash. An outflow of how much cash?
$7,500.
$7,500. Okay, good. During the year, there was no disposals. There were no disposals of plants and equipment. Although, as noted in the above balance sheet, there was a purchase. So what is the purchase of a piece of plants and equipment? What type of activity?
Investing.
Is it investing? Is that an inflow or outflow of cash?
Outflow.
It's an outflow. Remember, you're always concentrating on the cash. Is it an inflow or outflow of cash? It's an outflow of cash. Okay, well, let's look up at the change in this plants and equipment. It went from $120,000 to $132,500, right? So how much of a change was that? 12,500?
Yeah, 1,200. Yeah.
Okay, so that was an outflow of $12,500, correct? Okay. As noted in the above balance sheet, additional common stock was issued during the year. What's issuance of common stock? What type of cash flow?
Financing.
Financing. Is an inflow or outflow of cash?
Inflow.
inflow, and how much cash inflowed?
8,000.
Well, it went from 38.6 to 41.6.
Wrong row.
Yes. Common stock.
Sorry. Thank you. I was testing you. Good job. It went from 100 to 108. So how much common stock? It increased by 8,000. So we brought in cash of 8,000. Is that correct? Good catch. Thank you. All right. Okay, so that's what we have now, right? So let me circle the investing cash flows. We have one right here, and we have one right here. Is that correct? Okay, so the first step in doing a cash flow statement was to calculate the operating cash flows, right? The second step in doing a cash flow statement was to classify and quantify. Now, the step number 3 in doing a cash flow statement is to take this information that we did in step 2 and prepare your investing and financing sections. Okay? So let's take a look at that. For those of you who did it, for those of you who asked me to do it, or for those of you who did what I asked you to do, my bright students, my good students. So Matt, I'm not talking to you. Michael, not you either. I'm just kidding. I love you all equally. Okay? But for those of you who did do this, did you get these numbers? Okay? Check my work. Make sure I did it right. Okay? Now, one thing that I want to point out is, and I've said this before, but let me say it again. I have a tendency to title these yellow numbers net operating cash flows, net investing cash flows, net financing cash flows. The way that the book likes to do this, though, is if it's positive, they call it cash provided by operating activities. Cash provided by operating activities, since it's a positive number. And this would be cash provided by financing activities, okay? Now, what do they call a negative number if one of those numbers is yellow? Or one of those numbers is negative? Cash used in, and in this case, investing activities. So make sure you're aware of that designation. If it's positive, it's provided by. If it's negative, it's used in. Okay? All right, so the third step, though, is to prepare the investing and financing section using the information that we gleaned from doing step number 2, right? What's the fourth step? Fourth and final step.
Add it all up.
Add up those 3 yellow numbers and see if they in fact equal the net change in cash that you know what it is, right? We know the net change in cash. We know that cash went from $24,000 to $25,300. We know that cash increased by $1,300. So by golly, by gum, do those 3 numbers in yellow add up to $1,300? Nope. Yes, they do. What if they didn't?
You did something wrong.
Then you made a mistake, didn't you? Okay? You made a mistake. So a lot of times when I'm doing these, I'll write that number that I know it has to equal out here to the right. That's what I love about cash flow statements. There's a self-checking mechanism. Okay? And we're going to talk more about that today. But this information right down here, we know from the very beginning, do we not? And that is part of the cash flow statement. That needs to be on there. This isn't just a self-checking mechanism that we do. That is part of it. And remember to put the name of the company, the name of the statement, and date it properly. Okay? But that right there is a complete cash flow statement. You with me? Okay? Any questions on that? Guys, any questions? Okay? All right. Now what I want to do is I'm going to try to, let me look at this Elmo here. This is our complete cash flow statement, right? This is our balance sheet, correct? This is our balance sheet. This is our cash flow statement, correct? What I want to do now, and I'll tell you after we do it why I'm doing this, but I want to show you that every change in each balance sheet account is somehow represented on the cash flow statement. Let me say that again. The change in every balance sheet account, whether it's an asset, liability, equity, each change in each balance sheet account is somehow represented over here on the cash flow statement. Are you with me? Cool? So let's go ahead and let's take a look at that, okay? Let's just go line by line, okay? Well, is the change in cash somewhere over here? Yeah, that's pretty easy. It's right here, correct? The change in cash. Okay, so the change in that balance sheet account is right there. It's on the cash flow statement. What about the change in accounts receivable? Is that somehow represented over here? Isn't it right here? You see what I'm saying? Okay, good. What about the change in inventories? Is that somewhere? It's right there. Isn't that correct? So far, every balance sheet account change is over here somewhere. What about the change in long-term investments? Where's that? Right there. Correct? Okay. What about the change in plant and equipment? Well, it is shown right here, correct? Now, I have a little side note here. A little bit of a side note. Now, it told us, let's go ahead and do a T account for plant and equipment. Okay? Plant and equipment, right? Now, what is our beginning balance and our ending balance of plants and equipment?
Beginning is 120,000, and then end is 132,500.
Correct. Now, didn't it tell us in our additional information that we did not dispose of any plants and equipment? So they told us basically that this was zero, correct? So, and then they told us that we purchased 12,500, right?
They didn't tell us that.
Well, they didn't tell, oh, yeah, but thank you. What they did is they gave us the beginning balance and the ending balance. They told us that there was no disposals. So we could therefore calculate that there was a purchase of 12,500, right?
Well, and they say there was a purchase in the additional information.
Yeah, and they said there was a purchase. We just had to figure out how much it was, right? Okay. But I say this because if they just give you the ending and beginning balance, you can't just say, oh, there's a purchase of 12,500, because there could have been disposals. You see what I'm saying? Are you following me, folks? Yeah. But they told us this was zero, so we know that the purchase was 12,500. Okay, so let's go back to my original question. Is the change in the plant and equipment balance sheet accounts, is that somewhere represented on this cash flow statement?
Yes.
It is right there. Okay? What about the change in accumulated depreciation? Well, let's do another T account. What type of account is accumulated depreciation?
Is it contra asset?
You are correct. I'm proud of you.
It's contra something.
It is accumulated depreciation is a contra asset account. What does contra mean?
Opposite.
Opposite. An asset is a debit balance, so a contra asset is a credit balance account. What's the beginning balance of accumulated depreciation?
46,800.
What is it, 36.8?
46.
Oh, I don't believe you. 46.8, you're right, sorry. 46,800, okay? That's the beginning balance. What is the ending balance?
5,800.
50,800, okay? Now what I'm going to ask you is this. When do we credit accumulated depreciation? How does accumulated depreciation increase?
When you calculate the next amount of accumulated depreciation,
When you do what?
when you recalculate monthly.
Okay, yeah. Let me clarify what you're saying. When you do your depreciation entry, right?
Yeah.
I mean, think about our depreciation entry. Isn't that our depreciation entry? Isn't that when we credit accumulated depreciation? Do you see what I'm saying? Okay. So depreciation expense is when we credit accumulated depreciation. That's the way it accumulates, correct? Okay. Now, here's the question. Do we ever debit accumulated depreciation? Do we ever decrease it?
When we sell the equipment.
Yes, yes, we do debit it. We do decrease it. It doesn't just grow into eternity. Matt, when do we debit accumulated depreciation?
When we sell the equipment.
When you sell or dispose of equipment. Remember how when you sell or dispose of equipment, you take the asset off the books, you take the related accumulated depreciation off the books? Remember that? Because you don't have the asset anymore, right? So when you take that related accumulated depreciation off the books, you told me properly that accumulated depreciation is a credit balance account. Thus, to decrease it, we have to debit it, correct? So, accumulated depreciation is debited when we dispose of plant and equipment. But did we dispose of any plant and equipment this period? No, we did not. We just talked about that. So they are telling us that this is 0. Thus, we know that the entire change in this beginning and ending balance is due to depreciation expense, which is how much?
4,000.
4,000. Now, why do I go through this whole rigmarole? I'll tell you why. A common question I get is, when I am doing my operating section, should I get my depreciation expense from, should I get it from the balance sheet or should I get it from the income statement? And in this case, it's the same number, right? My answer is this. Always get your depreciation expense or your non-cash expenses from the income statement. Always, always, always. And somebody will say, well, it doesn't really matter because this is the same number. It was the same number in this instance because there were no disposals of planned assets. And they basically told us this was 0. Are you following me? But otherwise, if they just give us the beginning and ending balance, we have 2 unknowns. We can't solve for it when we have 2 unknowns. So we can't just say the entire change was depreciation expense. As soon as they gave us that 0, though, by golly, in this case, yes, the change in accumulated depreciation was entirely up to depreciation expense. Did that make sense what I just went through? Okay. So back to my original question. Did we account for this change in accumulated depreciation somewhere on this cash flow statement? Yeah. Yes, we did, right there. Correct? Okay, so every change in every asset account and every contra asset is somehow represented over here. Is that correct? Now let's go through the bottom half of the balance sheet. Is the change in accounts payable somehow represented over here? Where is it? Right there, correct? Yep. What about the changes in wages payable? That's accounted for right there. What about this change in common stock? Did we account for that over there?
Yeah.
Right there? And then our old friend, retained earnings. Retained earnings. Let's come off that for a second so I can stand up. Remember our old buddy, retained earnings? Do you remember how I made the big to-do about nobody can ever remember what retained earnings is? Do you remember that? So tell me about retained earnings. What is retained earnings? What's its balance? What type of account is it? Yada, yada, yada.
It's an equity,
It is an equity account.
credit balance.
It is a credit balance.
And it's basically the same thing as capital.
It's basically the same thing as capital. Did you know that over half of you, though, missed that multiple choice on the first test? Even though I went over it and over it. Y'all told me it was a contra equity or something like that. No, it's not a contra equity. It's an equity account with a credit balance, correct? And it's like the capital. It's like the capital account. And the capital account, remember the capital account from sole proprietorships in Accounting 1? It increased with net income and it decreased with withdrawals, right? So the retained earnings is what we call it when it's a corporation. Okay? Cool. So let's do a T account for retained earnings. Okay. Retained earnings. Is it a debit or credit balance account?
Credit.
It's a credit balance account. The beginning balance is 38,600. Is that right? Check me.
Yep.
And the ending balance is what?
41,600.
41,600. When do we increase retained earnings?
When net income
With
is
revenue
Net income.
positive.
Net income increases retained earnings. Now, if we had a net loss, it would decrease it. When do we decrease retained earnings?
Withdraw.
dividends.
Yes, not with withdrawals. We don't call them withdrawals with a corporation. We call them dividends. You with me? Okay, do we know the amount of net income in this situation? We do. Where do we find the net income? On the income statement. How much was the net income?
10.5.
10,500. Okay. Do we know the amount of dividends paid? How much?
7,500.
7,500. Is that correct? Okay. Now my question is this. Does this plus this minus this equal this?
Yes.
Yes, it does. That plus that minus that equals that. You with me? So, retained earnings increased with net income and decreased with dividends. So my question is this, folks. Did we account for these two items somewhere on the cash flow statement? We did. Net income is right there. Dividends is right there. So, did we account for the change in retained earnings somewhere on this cash flow statement? Yes, we did. Thus, I have just proven to you that every change in every balance sheet account is somehow represented on the cash flow statement. Am I right? Now, why did we go through this? Was this just so you could be impressed with how smart I am? That was a large part of it. No, I'm just kidding. Maybe a little. Okay? No, here's the why I went through that exercise. Because sometimes I will go out to a client and I'll say, have you ever done a cash flow statement? And they look at me like, because, you know, my clients aren't Sprint and Garmin and PepsiCo. Mine are smaller companies. Okay, so there are a lot of times they're never publicly traded, and a lot of times they don't have to prepare financial statements if they don't want to. Okay, unless the bank requires it. But I'll say, have you ever done a cash flow statement? They say no, and I say, well, we need to do one. Okay, so I will do a cash flow statement for a company that has never had one before. Now, when I do a cash flow statement, I go through those 4 exact steps that I told you. And like looking at this one, once again, when I know, like in this particular case, I know that the 3 yellow numbers have to equal the change in cash, correct? Well, what happens when they don't? And I always do this on Excel, so I can see that number changing as I put in items up here, right? Well, if that number doesn't equal the change in cash, you know it is not a correct cash flow statement, right? Well, then I go back and I look to make sure I didn't do a sign wrong or anything like that. And no, everything's right. Increase in wages payable is added. Decrease in AR is added. Everything's right there. But by golly, those 3 yellow numbers don't add up to what I need it to be. So then here's the next step that I do as a consultant. I go through every balance sheet account and ask myself, is the change in this balance sheet account somehow represented on my cash flow statement? Are you following me? And usually what happens is I'll find some weird little balance sheet account, like an intangible asset or some sort of little prepaid rent or something, and I'll go, I know the change in that balance sheet account is nowhere on my cash flow statement right now, so I need to make sure it gets on there. You see what I'm saying? So that's how I utilize that knowledge. I'll go through the balance sheet accounts and make sure it's accounted for on that cash flow statement. And of course, in real life, the balance sheet has a lot more accounts, right? Okay? Make sense? Mm-hmm. Cool. All right, any questions on any of that, folks?
I was gonna ask, related to, you know, the selling of the long-term investment. It said that there was no gain or loss on the transaction. So if there was a gain on the transaction, does that impact how we account for it on the cash flow statement? I guess it was just confusing to me because it said that there wasn't a gain, but obviously that account changed.
Okay, well, that's a good question. Let me answer it for you. You know, the reason I made it so there wasn't a gain or loss was just for simplicity's sakes. But what that meant is, what was that long-term investment?
9,000.
Yeah,
9,000. So when we purchased it a long time ago, we paid $9,000 cash for it. And when we sold it, by golly, that just so happened to be the amount of cash that we received. Okay? You with me? But, you couldn't see that. Tell me if it doesn't show. But let's say that this is what we paid originally. And let's say we sold it for, you know, $10,000. Well, then we would have had a gain of $1,000. Now we still would have showed cash or sold investment, and we would have showed the amount of cash that inflowed, the $10,000. But this gain would have been subtracted from the net income. Okay? Does that make sense? Does that make sense?
Yeah.
Now, I'm glad you said that because that reminds me. Listen to me. All gains are subtracted from net income in the operating section. All losses are added to net income in the operating section. Whether it's a gain from selling a long-term investment or from selling a truck or a piece of land or whatever. All gains and losses are treated accordingly. Okay? Every now and then a student will say, now wait a minute. That's a gain from the sale of a long-term investment. You said we don't analyze long-term investments in the operating section. You are correct. We don't analyze the change in the long-term investment, but if there's a gain or a loss, then we do. The gain or loss is accounted for in the operating section. You following me? All gains and losses are in the operating section, but the change in the asset itself would be in the others. Okay? Good question. Any other questions?
Good question.
Any questions? Okay, what I want to do today is we are going to work on, you can show this on screen while I'm passing it out. We're going to work in class as they play that snazzy music, and we are going to work on this Rose Now cash flow example question. We're going to do it in its entirety, okay? And again, you know, when you do it a cash flow in its entirety, you have that self-checking mechanism. So you should know if you certainly should know if you don't have it correct, right? Okay? So they're going to roll that music, and we are going to work on Rose Now Inc. cash flow example. You folks at home, you do it as well. It should be in your handouts. See you in a while. Okay, folks at home, if you're not done, just pause this and push play when you are. But let's go ahead and take a look at the answer. You'll notice I made a mistake. Boy, that doesn't happen much. But these are negative numbers, right? So I had initially mistakenly said provided by when I should have said used in, correct? And this is provided by, that's correct, that's positive. But there is the answer. Let me see if I can zoom in a little bit more on that. Get rid of the titles there for a second. Okay, can you see that back there, Luke? Okay. All right, do the 3 yellow numbers add up to what I know to be the decrease in cash of $41.50? Okay, cool. All right. Okay, any questions on that? Any questions on that? Now make sure, even though you can't see it on the screen, make sure that you always put the name of the company, the name of the statement, and you date it properly, okay? I lovingly take a point off of quizzes and tests if you don't do that. All right? Okay? Any questions on that?
So when it comes to investing activities and financing activities, whenever it's an outflow, it's decreased, and whenever it's an inflow, it's increased?
Yeah. Let me state that a little different way. Whenever it's a negative number, it's a net outflow of cash. Whenever it's an inflow of cash net for that activity. Are you with me? Okay. Now, we're not going to get a whole lot into analysis of cash flow statements. But I want to point out, how well, let's take a look at this. How well do you think this company is doing?
Very well.
Why would you say that, Jeremiah?
Because of losing cash.
Well, their cash went down. Now, cash going down is not always, though, a negative indication. Maybe they're purchasing plan assets that will provide wonderful benefits and help you increase revenues. So you can't just say a decrease in cash is bad. But why, what else on this indicates that this company is not very healthy?
Their only positive income is from financing. Everything else is
Yes,
negative.
let's think about this. They have a negative number from the cash from their operating activities. Isn't your operating activities supposed to be the thing? Isn't your operations supposed to be what is generating cash? This looks like a hobby. This doesn't look like a company. This looks like a hobby, right? They're not generating cash from their operations. As a matter of fact, their operations, it's a net outflow of cash, correct? That should be very alarming. Now again, I'm not going to talk a whole lot about interpretation this class period, but people, when they look at these cash flow statements, they value the net cash flows from operating activities a lot more than these two. Their focus is up here. That is negative. That is not good. Are you with me? Operations should not be a drain of cash. They're supposed to be what's producing cash. Okay? Now they purchased some equipment, but think about this. The only reason that their cash didn't really decrease is they issued some stock. Now I don't know who would buy stock in this company, but you know, maybe you have some land, some swamp land you can sell them to, right? As they say. Think about what their decrease in cash would have been if they wouldn't have sold this stock. You see what I'm saying? It would have been a drain everywhere. And now, going back to what you said, Jeremiah, this decrease in cash coupled with what we see up here, that is alarming. And you're like, well, it only decreased by $41.50. It decreased from $30,500 to $26,400, approximately, right? That's over a 10% decrease in cash. Are you with me? Here's another thing that's alarming, is their inventory is increasing by a whole lot, isn't it? What does a buildup of inventory mean? People aren't purchasing, our customers aren't purchasing our inventory. That is alarming, isn't it? Ooh, what else is happening? Well, accounts payable went down a little bit. Accounts receivable went up a little bit. I don't know if people are paying slower, but that might be something we want to look into. Okay? This is a situation that is cause for concern, mainly because of this, but for those other reasons that I indicated. If this was a client of mine, we would need to start digging into some of these and seeing what is the situation. You follow me? Do you see how something like this can be actually used in real life for analysis, for managing a business, for deciding, would you lend money to this company? Because this company, I can tell you from my experience, they're going to need cash. They're going to come in and try to get you. They're going to show you their net income of $13,500, and they're going to say, hey, can we have a loan? And if you know what you're doing, would you extend credit to this company? Absolutely not, if you want to get paid back. Okay? We need to have more commercial bankers and lenders that can not just look at net income numbers, but can analyze financial statements to see what's going on, see what the true picture is. Make sense? Okay. All right. Let's come off that. I only have about another minute, but I need to tell you this big announcement. Okay? This could be my last lecture, because while you were doing that, I got an email, and I don't know who this person is. It's somebody, but they have an inheritance of $3.2 million. And I guess this person has some health problems. And they want to transfer this money into my account. Can you believe the luck? This is my lucky day. I don't know who this is, but she's saying I'm a good Christian man and she wants to help me. So I'm going to give her my vital information, and if this all works out, I might not be here again, okay? Because $3.2 million, that's a lot of money. So let's see how that goes. If you see me next time, it may still be in process. Okay. What I want you to do for homework is this. I want you to read pages 652 to 653. And I want you to do, let me double check it. I want you to do what I believe is Quick Study 1612. Columbus Day. Okay? So do Quick Study 1612. Now I also want you to do something else. Okay? And that is this. I'll hand this out to you guys after the cameras are done. I want you to do the complete Foxborough Company cash flow problem. This is another complete cash flow statement. They're getting progressively more challenging. Okay? So, read those pages, do that quick study, do your complete Foxborough cash flow problem, and then we will start chapter 17 next period, all right? Hey, this was a good class period, don't you think? Did you learn something?
Always.
Awesome. I'll see you next time if that inheritance thing doesn't work out. Otherwise, it's been good, okay? Bye-bye.